After there's a move, there's always context involved. It's not too late to understand context or to be able to use um, a move up or down. If you could also say, hey, this move right here, in my opinion, came out of nowhere. Nobody was expecting a big move up, or in this case, down. So it's very transitional. And I often say, I feel the market's going to respect that move. In this case, respect this downside with more downside. So there's going to be some follow through. We're going to be lower in the future than we are right now. So it's about that's your step one. Now you're looking at step two, location, step three, fire in that ready aim fire progression. The point is, if a move down comes out of nowhere and you really think you got a lot of people off guard, off sides, then downside follow through is a healthy bias. All right. But what could have kept you from being stuck in this knife right down? See this down bar right here? There's a couple things that, if you're thinking about getting long, could have kept you from getting long. There were more longs than short, this green laser. Look at how fat the offers were and how thin the bids were. If I play it, you actually get the bids to sink below 200, which is bearish. So really, there was nothing at this moment that would have got you to execute a long position. It's okay to be bullish here, but boy, it would be nice if when you're bullish and wrong, you're not long. You could be bullish and wrong and not lose money because you have a good step three. That's what's important. All right. Now, another thing, if you look at this market, and I fast forward it right to here, you could see the move, the retracement, and then the follow through, lower low. Okay. But it's not that easy to get short in here because it's choppy in this resistance area between our red and green TWAPs. So you got to fight for a location. Where would you want to be short? Novices would say up here, the highest price that it came in this sequence. No, you want to be short right in here. Soon, right before it breaks. That's the definition of a good location, having it go your way ASAP. All right. So let's see. It's always better to get this jump in and then out of potential resistance, but you have to have this area as resistance going in. All right. And then we'll take a look at it under a microscope. That's this chart. And if I back it up, you could see right in here under a microscope, what is there happening? If I go back and forth, just put your eyes right here. If I go back and forth, what in there could get you on the team, which is on the short side? All right. You're already bearish. All right. I'll save you that. You're already bearish. Now you're looking for a location and the timing to get short. What in here could have helped you pull the trigger? First of all, the OPP, other people's positions, going from short to long. Now, these numbers are small, but they grow to 42, which is a pretty big number in the sequence and in the context of this particular session. All right, so that's number one. Longs creep in. Do you want more longs or less longs if you're short? You want more longs. You want every person in the history of people to be long if you're short. All right, because after you're long, you're a seller, and that's what you need. You need future sellers. So that's one thing. The laser goes red to green right in here. This isn't any magic potion. It's other people's positions. It's reading order flow in the context of those orders being used to open a long or short position. Look at this. Not only do we have a fat offer on the chaser here, but you got a nice thin bid. It's under 150, let alone under 200. This is a good ratio, 533 to 144. That's another moment to time the short, because the best location is not where you get short or long, it's when you get short or long. Don't talk price, talk time. You want to be short as close to when it sells off as possible in this example on the short side, right? And so the market does follow through. It makes a lower low and everything else. The whole point of trading is to pick your spots, but line yourself up in a ready aim fire progression. Step one, step two, step three. What's your opinion? What's the location to execute that opinion? And then what do you actually use to execute, right? pull the trigger. You have to set it up. Everybody has a ready, aim, fire strategy. A lot of people don't realize it, and a lot of people have a bad ready, aim, fire strategy. A lot of people are firing before they aim, aiming before they're ready, firing before they're ready. But everybody has a progression to get long, to get short. But if you break it down and you focus on, do you have a good step one and a shitty step three? Do you have a shitty step one but a pretty good step three? Because a lot of people are working on areas of their trading that they're good at, but the results are bad because they didn't break down their trading. So they're working on a strength and ignoring a weakness. So you have to break down any skill, and proper education is continuing education and the breakdown of your skills. And then if you look at like carpentry, you break down that skill. Some people are good framing. Some people are good finish carpenters. Some people are bad in all aspects of carpentry. When you break down, if you had a business and you had, let's say, electricians, and you understood these guys are good at roughing in houses, these guys are good at kind of the finish work, these guys are good at nothing. But you break it down, whether it's a trade or a trade. Most people don't do that. Most people have a, and by the way, in my experience in this business, step three is the most common weakness. And it's not because people have a bad step three, it's that they have a very random, arbitrary, take a shot, use my emotion step three. That's my point, is that people have a fire, ready aim fire. It's just not a very good one. It's often emotion that gets them pull the trigger. It's like if I were to tell you, talk me through a trade that allowed you to get short in here, and you said, I was bearish because I felt like the market was going to respect this move lower. I thought there was some good resistance up here at this green PWAP, and I just felt like this was the time. But what do you mean you just felt like? Well, I just had like didn't want to miss it. Oh, so you got short because you didn't want to miss it. It's not a very good objective step three. And it might work in certain instances, but you can't allow emotion to be your step three. You can't allow emotion to and expect to be objective. Can't use your emotions a lot and expect to be objective. But if you were to tell me the first two steps, bearish for the reason that this downside had some legs and there were going to be some follow through, came into an area of resistance I had because the average people who are long are long and stuck from these, what was it, 02 or 03 up here, plus the open was up here. And then as we came in, I seen long sneak in. In fact, I seen more longs than shorts on my 2-minute OPP. And on my chaser, which is what we call this gray and white vertical, on my chaser, it went from a pregnant amount of buyers and a skinny amount of sellers. Watch it flip. You're trying to anticipate this, by the way. You're looking for this to flip. So when you see it, it's a lot easier to execute around it. If you don't know what it means, or you don't know what you're looking for, then you're not going to react to it. But right there is when it went from more buyers and sellers to even to now more sellers. And now you had a ledge. Boom, they take that ledge out. The grays really get pregnant. And now you've got a sub 150 on this number right here. Now you're talking, right? Now, if you explain it to someone that that's what you did, you're going to sound like you know what you're talking about because you know what you're talking about.